All right, let's get started. Good afternoon and welcome to another Sage Investor webinar. My name is Jin and I'm a co-founder of the Sage Investing Group along with Maggie and Lana. Thank you so much for joining us today. If you guys have questions during the course of the presentation, feel free to put it in the chat box or you can maybe hold it to the end and you can just unmute yourself and ask them as well. That's fine. So today's webinar, you guys are here to learn about the what, the how, and the whys of the accredited investor status. As some of you may know, the SEC, they recently changed, they amended the definition of what is an accredited investor. This was effective back in December 2020. So we'll talk today about how the accredited investor was defined previously and how it has changed since December 2020. And we'll also talk about why these changes are important and how it impacts you as an investor. So as an investor, to be an accredited investor, it is a pretty elite status, which allows you to invest in a lot more deals. It gives you access to invest in opportunities that are in earlier stages of development, such as maybe a company during the early conception or development research stage, or IPOs, or alternative investments such as oil, or what we do, which is multifamily syndications. So we're really glad that you're here today to learn a little bit more about what this accredited status is and whether you qualify as an accredited investor, especially now that the criteria has been amended. And then at the end, we're going to address a pretty commonly asked question by walking you guys through an example of how to calculate whether you meet that $1 million net worth test. So before we just jump in, I just want to give you a brief introduction about the Sage Investing Group. It's Maggie, Lana, and I, and we all have a Big Four accounting background, which means that our background is rooted in audit and risk management. So sadly, auditors, we ask a lot of questions. So a lot of our clients back in the good old Big Four accounting days, we weren't really well liked, but we find ways to get along with them so we can get information that we needed. And so anyways, that's kind of what we do. We ask a lot of questions, and that's how we vet our deals. We like to see evidence, from the operators. When we ask them certain questions, we want to see the evidence before we believe, the numbers and believe what they're saying. So anyways, although not very popular among our clients, we do see a lot of value in what we do and how it can help other investors in this multifamily space. So now we use our combined 35 years of professional experience in audit, accounting, finance, along with our real estate investing experience and thousands of hours underwriting multifamily deals to do what we do today in multifamily syndications. And that is, we critically vet the deals so that busy professionals like you guys can invest with greater confidence in these syndications. And so now we have grown a little bit. We have now over 220 members in our Sage Investor Circle, and we have over 475 Facebook followers. And collectively, we have participated in 14 deals, totaling over more than 3,000 units, with a portfolio valuation of more than $350 million. And we are so excited to be adding on another 360 unit, another 783 unit, and a 354 unit investment to our portfolio soon. So evidently, as you can tell by these numbers, we believe that multifamily is one of the best asset classes to invest in. And we've created this webinar series to provide that educational content to our audience so that you guys can decide for yourself if this is the right type of investment strategy in your life as well. And so this webinar is for anyone who has ever tried to invest in syndications but ended up backing out. You invested in syndications before, but you didn't feel like you know enough about what you were getting into, or you just feel overwhelmed by all the information that's out there. So this is a great place to learn and just to continue building upon your knowledge so that you're prepared when that next opportunity comes up. And now just a little disclaimer that this webinar is for your education purpose only. And although all of us have like a CPA background, Sage, we're not a legal, a financial, or a tax advisory firm. So please consult with those respective professionals for the legal, financial, or tax related questions. And also please know that we can't guarantee any returns. We cannot guarantee any returns. And of course, there are risks associated with any investment that you make. And with, sorry, I guess my animation got messed up. All right, so let's start off now by getting into it. We're gonna learn the two basic definitions of the sophisticated and the accredited investor according to the SEC. So just to preface all of this, the reason why the SEC kind of set these perimeters in the first place is that they want to protect investors, the general public, by restricting who can put their money into more loosely regulated or more complex financial offerings. So compared to, let's say, stocks, anyone can buy stocks because the public companies that offer their shares to the public are highly regulated by the SEC. So whereas these real estate investments that you guys invest in, they're typically not as regulated because it is not feasible, right, to take each investment opportunity that we get and to take it public every single time. There's actually a lot of cost and complexity associated with that. And so the SEC has come up with a different way for like private investments such as real estate syndications to gain investors through private equity. So to invest in private offerings, such as these multifamily syndications, at minimum, a person has to be a sophisticated or also known as a non-accredited investor. And as a sophisticated investor, the SEC just defines it as someone who has sufficient capital, who has sufficient net worth and experience to weigh the risk and merits of an investment. So since the criteria are pretty general and subjective, it is our responsibility when we capital raise to get to know our investors, to make sure that they have sufficient capital to be investing, that they're not using their emergency funds to invest in these deals, and that they have sufficient net worth and the experience to be involved in these private investments. So experience, just to kind of define that a little bit more, is just that they need to be able to, the investor needs to be able to understand like what they're investing in, what the risks are in these investments, and they need to have the resources to be able to investigate the investment themselves and to also withstand any losses if it should incur. And also, just as important to be a sophisticated investor, to invest in our deals, we must have a substantive pre-existing relationship with that investor. So another reason why it's important to touch base with Sage, either on the phone or via Zoom, so that we can start establishing that relationship with you before we are able to share any 506B deals. And so, yep, I wanted to point out that sophisticated investors are only able to invest in 506B offerings. We'll get into that a little bit more later on. And now let's take a look at the accredited investors as defined by the SEC. So what we have here is the old definition, but it has been amended effective December 2020, like I mentioned earlier. But let's just talk about the old definition first, because it still actually is intact. Nothing has been taken away from it. It's just they've added more, I guess, like more criteria that you can meet in order to become accredited. So as you can see, the criteria here is a bit more clean cut. It states that you need to either meet the either meet either the income or the net worth test. So for income, you need to individually have made $200,000 a year, or jointly with a spouse have made $300,000 a year for the past 2 years prior to the investment. And you expect to continue making this amount of money moving forward as well. And then for net worth, it's simply, you need to have $1 million, at least $1 million in net worth. And the net worth calculation is excluding your primary residence. So as an accredited investor, you can invest in either 506B or 506C offerings. But to invest in the 506B, you still need to have a pre-existing relationship with these sponsors. So one big takeaway from here is to jump on a call with us, regardless of whether you're sophisticated or accredited, especially if we haven't met yet, because regardless of which type of investor that you are, we need to know you in order to share any of our 506B deals with you. All right, and now, as I've mentioned, the accredited status has been amended, and the amendments, like I said, only created new categories of for accredited investors, and it doesn't necessarily take away anyone who were already currently qualifying as an accredited investor based on those income and the net worth test. So today we're just going to focus on the main changes, right, to the accredited investor definition that would most likely apply to our investors. So here is that original accredited definition that we just reviewed. And now you can be accredited as well if you meet the income and net worth test by pooling together your finances with a spousal equivalent. A spousal equivalent is just defined as somebody who you live with and who you have a relationship with. Generally the equivalent to that of a spouse. And so for this to count, it does require you to check, require your state to recognize the spousal equivalent definition. So licensure. If you are a professional with certain certifications, such as Series 7, 65, or 82 license, you are considered to have the experience or the knowledge of investment securities and the risks associated with them. So by default, it makes you a qualified accredited investor now. And just so that, just a brief high level highlight of what these series license really mean. A Series 7 is just somebody who can sell basic securities. They took the test and they got licensed to sell basic securities. Series 65 is just an investment advisor or licensure. And a Series 82 is just someone who got their certificate to sell, the license to sell private securities. So that's really high level of what those kind of mean. And so lastly, if you are a knowledgeable employee of a private fund investing into an employee of a private fund that is investing into the offering, you can also be considered an accredited investor as well. So for example, some of you may not know what private fund is, but it is essentially like, let's say you work for somebody. If you're somebody and you work for a company that was putting together this thing called a fund of fund. And let's say that fund was investing in one of our syndications. So since you're an employee, you can invest in that syndication as well individually because, as an employee, you were intimately involved in the deal evaluation. And therefore, you're deemed to have sufficient knowledge about that particular deal and the risks involved in order and the risk involved in that particular deal so that you can invest as an investor. So just want to talk about the impact of what this all means. Like, what does it, how does it impact you that the SEC has expanded on that definition for accredited investor? So by expanding the definition, the SEC is really, they're increasing. They're doing two things. They're both increasing the avenues for syndicators or private companies to raise funds. And it also allows more people the opportunities to invest in private offerings. So if you didn't qualify before because of who your partner was, you can now include them in that net income and net worth test. And maybe if you're in that, in the finance profession, you can think about getting maybe your Series 7 or 65 or 82 license so that you can become accredited without meeting those income and net worth test calculation as well. And finally, if you can qualify if you're a knowledgeable employee of the private fund investing in offering. So you can possibly work for a fund that is investing in an offering in order to get access to that. So those who meet the new requirements can now invest in both 506B accredited only deals. There are certain 506B deals which says only for accredited investors. So those are open to you as well. And you can also invest in 506C deals. And now just wanted to walk you guys through a sample net worth calculation test. Since we get that question a lot from investors, how do they calculate what their net worth is to determine whether or not they're accredited? So we're going to meet our avatar. Her name is Jamie. And of course, she's wondering if she's accredited or not based on her net worth. So let's take a peek at her balance sheet. Okay, I think anyways. I messed up a little bit on my my icons, but whatever. All right, so let's remember that when we calculate the net worth test, we are going to exclude Jamie's primary residence. We do not include the equity that she has in her primary residence as an asset in this calculation. So we're just going to add up all of her assets that she possessed, such as her bank account balance. So let's say that she has $400,000 in her bank account. She has another $400,000 in her 401k or IRA account, and her car is worth $20,000. And she has like other investments that adds up to $400,000. So then her total asset adds up to $1.22 million. And then we're going to add up her liabilities. And her liabilities include some student debt and car loans, which add up to $100,000. And she has some credit card debt, like we all do, $20,000. And she also has some other liabilities that adds up to $80,000. So her total liabilities adds up to $200,000. Did I say, okay, so other liabilities, 80,000, total liability of 200,000. So then we net those two figures, the total asset and the total liabilities together, and we find out what the net worth is, which is slightly over $1 million. So yay, she is accredited. She made it, and her husband can do a little happy dance. They can now invest in 506C deals. So remember, you can do this test. You can do this and do your own self-accreditation for 506B offerings. But if you are investing in a 506C deal, you can ask your CPA, your lawyer, or you can get accredited by a third-party verification company as well. So that's pretty much it for our presentation on the accredited investor status and the updates that come along with it. You guys, if you have any questions, please let me know. You guys can put it in the chat box. And while I give you guys some time to think about your questions, if you guys found this webinar to be helpful, And if you guys know someone who might be interested in learning more about investing in real estate syndications, please feel free to refer for us or to share and invite them to join our next webinar. And if anyone here is not a part of our group yet, we invite you to join us at our sageinvestinggroup.com. Join now. You just have to fill out a simple questionnaire. Well, it's not really simple. It's a little bit long, but it's okay. It maybe takes like 2-3 minutes to do. And most importantly, you need to set up a call with us, which I said earlier, we need to know you in order to be able to send you 506B offerings. And most of our offerings are 506B, so you don't want to miss out on those. So anyways, set up a call with us so that we can get to know you and see whether or not what we have to offer is a good fit for your investing strategy. So I think we have one more. I would think we have something in the chat box. Bao asks, thank you so much for asking, Bao. Can investors with assets overseas be calculated in net worth? So I'm gonna also invite my partners, Maggie and Lana, to chime in if they have any input on answering these questions. So let me read Bao's question again. Can investors with assets overseas be calculated in net worth?
Hey, I think I don't want to misspoke on this one, so let's get back to you, Bao, on that one.
Yeah, we'll get back to you on that. I don't think anybody has.
I do think it depends on, where your entity, like if you create an entity that holds the asset too. The reason why we're not answering now is I think the answer is it depends, which is no one's favorite answer. But it really depends on where does that asset sit. Is it your name? Is it a special entity you created for tax purposes? And then how that gets captured for your financial reporting purposes. So the answer is it depends.
Yeah, we'll get back to you on this, Bao. And if anybody else is interested in hearing the answer too, just let me know and we will copy you on that response as well. And does anyone else have any questions? I think like another common question that we get is, when you get accredited, how do you, like what kind of information do you have to provide? And of course, if you ask your lawyer or CPA to accredit you, they'll issue a letter, which is fairly simple for them to do. I think it's part of their job as your tax accountant to be able to just generate a letter for you pretty quickly since they know all your finances. But yeah, if you were to hire a third-party verification company to verify you, they'll most likely just ask for income and tax verification information. So like your copies of W-2s and income tax returns that you've filed is what they would ask for. And now I guess with the new accreditations, criteria, they might ask to see, they would probably ask to see a copy of your license as well. Or proof that you work for a fund of fund that is investing in the deal.
I have I guess maybe a question that some people had asked before.
Mm-hmm.
So, and we can kind of shine a little bit light on it. Someone asked like, why, as Sage, what makes us decide to offer a 506B offering versus a 506C offering? So maybe we can elaborate on that one.
That's a good one.
Yeah.
Okay, sure. Do you want me to answer that, Maggie, or do you?
Yeah, sure. Take it away.
Okay. Yeah, I'll take a stab. So yeah, so whether a deal is offered as a 506B or 506C, it really depends on the operator and I guess how comfortable they feel about raising the capital, right? So as a 506B, you're limited to only raising capital from your network. And sometimes, the network may be tapped out, and so you gotta, with 506C, you can't do general solicitation, you can't advertise it. So it's really just the people that you know and have a relationship with. And that are sophisticated investors. And so it really limits the pool of investors that you can work with. So if you offer a 506B, it just kind of opens up the whole world to you. You can essentially, advertise it to anyone or anything that you want to advertise it to. You can do it online, just general solicitations. You can publicly advertise it. So, but in that situation, it is only, you can only solicit from you can only get accredited investors to invest in your deal, because that's kind of what the 506C deals are. They are limited to just accredited investors, but you can advertise it, and it kind of opens up your pool of investors quite a lot. So you have like a deal that needs a lot of capital, or maybe you've tapped out of your existing network, then you might want to consider, then we would consider doing a 506C offering. Do you guys have anything else to add to that?
Yeah, in addition to that, I guess in the 506B, we do have to keep in mind that we can't allow all unlimited amount of sophisticated investors. There's a cap. We can only cap it at 35 investors, sophisticated investors. So when we think about who on a particular deal, the size of the deal that we're trying to raise, we got to think about the purchase price, what we had to fund the deal, how we're going to fund the deal, and then we got to look into our network. Are we able to pull enough resource in order to take down a deal? If not, then we might have to consider 506C. And then 506B, if we can do a 506B, we still have to consider, okay, who we can let in. If it's a sophisticated investor, we do have to be mindful of how many we let in and be cautious about that. So that's just a little bit something to add on.
Great, thank you so much. Hopefully, yep. And so we also have a question now from Tanya. She says, so would the letter be all that you need? Yep, pretty much. For 506C deals, those are the only deals, 506C, where you got to show some sort of accreditation evidence. So yes, if you get a letter from your CPA, you just send it in to the operator for the deal that you're investing in, and that's it. Those are great questions.
Yeah. In certain cases, they're also depend on the deal. They may be a third-party independent verifier, and you can file. They basically guide you through the steps and what you need to provide in order to get to the accreditation. So.
Yeah, so just to kind of clarify or kind of repeat or recap what Jen and Maggie has been saying, if you're not sure you're an accredited status, but you think just by basic kind of calculations that Jen kind of went through that you may qualify, and say you don't want to go to your CPA or get legal letter saying attesting to the fact that you are accredited, certain deals will hire a third party where they say, well, they have to get, if it's a 506C, it's actually, the burden is on the operator to also make sure that all the investors, even though they're saying they're accredited, the operators have a responsibility to make sure that they're truly accredited. And so very often in a 506C fund deal, they'll hire an independent contractor to do that verification for them. And then sometimes the operator will actually bear the cost of that verification process. So if there may be certain deals, and you can reach out to us, we can kind of help you through that too, is they will ask for your financial statements or basically collection of information and walk you through the process to see, are you truly credited or not? If you're credited, they've done that verification independently for you, for their operators. But if you're not, then but it's something, it is, in the instance you don't have that letter, there are alternative ways for certain deals.
Thank you, Lana. Thank you. Does anyone else have anything else? Well, if not, that's fine. We welcome you guys to send us any additional questions that you may have after the webinar is over. I will get back to you, Bao, on that one question you have. But yeah, thank you so much, guys, for joining us today. It was great seeing everyone, and we hope to see you guys again soon on our next webinar.